Well, hello, Mavericks. This is Rob Reinhold, and here we are at the US Payrolls Report. Good morning to our American traders, or I guess I shouldn't say North American traders. Good afternoon to European traders, and for our few Asian traders, good evening. It's it's strange on a Friday evening to be here, but this is what we do every single first Friday of the month. So let's talk about the jobs report we're about to get. We are about to get a jobs report. Estimates were earlier in the week, somewhere around 210,000. Those have been coming down a little bit. We're now down to 197,000. All right, now I talked about this report on Sunday, and we are to the point in the market where good news is bad news and bad news is good news. And we've been talking about this for the last 2 months. We usually want a very strong jobs report, except for little weird moments in the market like this. This has happened several times in my career where the market literally wants bad news. The market wants a bad jobs report because that's going to mean the Fed can actually back off, and that's what the market wants right now. And so estimates are for 200,000 for the US, and since we're here and it's the Canadian employment report as well, Canadian employment, 11,000 jobs. So anything above 200,000 is going to be stronger than expected. Now, 200,000, 210,000, you need to understand that the previous report was 263,000. So that to me is kind of like the line in the sand where if it's above 263, then this market is going to hate that number. And we're going to see the dollar spike. We're going to see interest rates spike, which means the equity markets are going to go lower. I think anything between 200 and about 250 is fairly neutral. You know, the market is already priced in because we just heard from the Fed, and the market's kind of already priced in that the Fed is going to be more aggressive than it thought. So I think a number between 200 and 250 is fairly neutral. Anything below 200,000, it is going to show that the job growth is slowing, and that is what the market wants to see. If you remember last report, the big surprise was the unemployment rate. The unemployment rate went from 3.8 down to 3.5 unexpectedly. And that was a real thing that freaked the market out last jobs report. As you can see, the estimates are for a slight raise up to 3.6%. Look, if these numbers come out soft at all, this is going to be a nice little market rally. And again, interest rates go down, dollar goes down. So let's talk about the potential trade here before we jump into all the charts. We have 3 methods of trading news. You can get in before the news. Before the news has the most amount of risk and the most amount of upside. You can get in on the news, literally have resting orders to get filled when the news comes out. Or you can do what we call a second stage entry, where you actually wait 5 minutes, 10 minutes, 15 minutes, and then you enter off of a continued move to, again, the upside or the downside. I'm going to be doing a before the announcement entry today. So let's talk about why we do this. First off, slippage. Let's talk about how to combat slippage, because trading around news reports, this is the biggest risk, is that you get slippage. And let's just take an example of this trade here. You go ahead and you get short, and then you put a stop in here at 183.10. And then all of a sudden this thing rips higher. Your order is not going to get filled at 183.10. You're going to experience slippage. You may not get filled until 183.50. So there's a lot more risk, and you can't quantify that risk because you have no idea where you're actually going to get filled on a quick moving market. You also get what's called whipsaw action. Now, this is very typical for the payrolls report. Whipsaw action is pretty much the norm, where you get one move one way, then another move the other way, and it basically stops out everyone. This is very likely to happen. This is why if you enter before the news, you can't have a stop very close to the price. You just can't, because take a look at this chart here. We got a move up and a move down. This is all on a very short-term chart. You can see we went to high here, and anything that was in this area got stopped out, and look, the price didn't really go anywhere. So longs get stopped out, shorts get stopped out, everything gets stopped out for a loss. This is highly likely to happen. So again, if we're going to be entering before the news, then we have to say, hey, I need to have a very, very wide stop. The question is, how do you do that? How do you have a very, very wide stop around a news report? And this is where we do our pyramiding. So I'm going to be taking a third of a position. What that means is if my position size was going to be 3 lots, I am going to take, okay, my position size is going to be 3 lots with a 30 pip stop. I'm going to take a 1 lot trade with a 90 pip stop. You see how that is just making us a really nice cushion here. So let's go in and let's take a look. Let's take a look at where we are in the market right now. We're going to go just down the board here. The dollar is selling off. So the dollar right now is down 0.7%. This is the dollar basket. This is the basket equally weighted against 7 other currencies. And we are selling off, down 0.7%. So the dollar at this point is weak. But if we take a look at this chart here, this is a 4-hour chart, we can see that the dollar ran up. The dollar has really high based. So we have a base pattern here on dollar. We are right smack in the middle of this base. Now, we've been basing since September. This is a big base. If we break out of this base, it's going to be a big move on dollar. Question is, which way is it going to go? We're smack dab in the middle of this very wide range. It's a very wide range. At this point, you just have to pick a side. Now, look, you can play both directions. You can say, okay, I want to play both directions, where you can have resting orders on either side. I'm going to be playing one side. I'm going to be looking at a short dollar trade. But like I said, I need to give it a lot of wiggle room. So the question is, what do we want to be long against? I'm going to go here I'm going to try to find something with the best momentum to the upside. Right now, the Aussie dollar is up the most. It's up the most. It's up 0.8%. But the question is, we got to look at the charts. We did get Asia overnight. The Hang Seng was up 5% on hopes that China is going to reopen. So the Aussie dollar is the best at the moment. The question is, does it have the best momentum to the upside? And I'm looking at this chart and I'm saying, I don't really love this to the upside. It's really just sideways. So I'm going to come over here to the Kiwi. And here I find a trade that is much, much better. I've got a currency right now that's already been hot. And we've paused here. We had a nice little pullback. We had a nice little pullback here. And now we're actually sloping higher on the EMA. We've got a buy signal on the parabolic SAR. And we have RSI that's generally starting to rise up into the 60 area. So everything on Kiwi is looking decent. I'm going to cover the CAD real quick, then we're going to go ahead and get into the position, since we do have the report here in 4 minutes. You can play the CAD. So if you're looking to play like dollar CAD, I call this a double whammy. I know it's not a very technical term. I would recommend not using it if you're trying to be a serious trader. But a double whammy means that you've got 2 currencies that both have news at the exact same moment. And this one has the possibility for the biggest move. So let's say the US jobs report is weak and the Canadian job report is strong. The dollar CAD pair is going to rip the most out of anything. I don't like to play double whammies a lot of the time because I like to isolate. Hey, I'm trying to get 1 right. I'm not trying to get 2 right. If you're a sports bettor, that's like doing a single bet on a game or a 2-game parlay. All of a sudden, it becomes a more complex trade. So for me, there is one currency cross, and it is Kiwi dollar. Kiwi dollar is the one we're going to be looking at. And like I said, I'm going to be doing an entry before the market, or before the news comes out. So my entry is going to be around 58.20. Now, typically, whenever I trade around a news event, I like to have my stop somewhere around at least 0.3% away. So this is about 18 pips. So it would be about 58.10, and that is just way too tight. I want to be down here. I want to be down here 57.40. Now that is a 85 pip stop away. That is like 1.4%. That is a huge, huge stop. So like I said, we're giving this the ability to really move after this announcement. This is a very, very big stop, very unlikely to be hit at the beginning. However, it's such a large stop that I got to cut my position size down substantially. So this one is actually, if we do the quick math here, this is about 4 times greater than the stop I want. So I actually need to, instead of take a third of a position, I need to take a fourth of a position to make it even smaller. So that's what we're going to do. We're going to take a fourth of a position, entry right around where it is, 58.20, stop down here at 57.40. Let's go in and let's build this trade. So I'm looking to be long Kiwi dollar. I'm going to be down here. Where's our stop? Down here at 57.40. We're all the way down here at this point. Okay, let's go down here. 57.50. Right. So I'm just going to put a buyout. And look, this is, I very, very rarely use market orders. Very rarely use market orders. But in this case, this is the best order to use. We're saying, hey, we're going to get in now, just at the market price. But if always we attach our stop order, so we're going to put in a stop. And we're going to put this price at 57. We're going to go 55, which is below this last low over here. Right, so this is the trade. This is the trade. We're going to go and get in. This is a fourth of a position with a very, very wide stop. Okay, so I'm in. I'm basically in the trade. This is the only way you can trade a big news announcement like this, is that you've got to have a very, very wide liberal stop. And the way you do that is you cut your position sizing down. Okay, so initial move is a move against. As you can see, a fairly big move against. Okay, we got about a 0.6% move against. We get that whipsaw action, but you can see we have already recovered about half of that initial drop. This is why, again, you must have a wide liberal stop, because if you don't, this got triggered. If you were long and you had a tight stop, you're already triggered, you're already out. And the trade hasn't really even developed here. So very wide stop off this news announcement. And then what I can do after this, and this is why I really like scaling in and scaling out, or pyramiding as we call it here at Maverick. What I can now do is I can now trade patterns. Now I have basically 3 more entries that I could take to get my full position. Now each time I take an entry, I need to move up my stop to maintain my original risk. So right now, my original risk on this is roughly 70 pips. Let's call it 73 pips. So if I take another position, I need to adjust that to where I have the same amount of dollar risk. So if this thing pulls back and I get a little buy signal here, so let's take a look at where we are here. We identified this base earlier, where we've got these levels around here. Take a look at this support level here. I can now start to enter some new positions, or at least, some additional positions based on these levels. Go to a little bit longer period chart here. All right, so again, like I said, we're getting just this pullback. It's trying to hold this 58.15 level. At this point, I'm going to get a parabolic SAR that is now triggered to be more of a sell. That's fine. We're just going to have to let this trade possibly develop and see what happens. All right, while we're just sitting here waiting for this, like I said, it's such a wide stop. There is very little chance that we'd be stopped out on the trigger unless it was a huge move. Let's check in on the rest of the markets. Let's see what the equity markets think of this. And sure enough, equity markets have sold off on the news. But again, look at these big tails. We now have an equity market that is actually trading above where it was before the announcement. This is why when you trade news announcements, you have to, if you're going to be in before the announcement, you have to have a wide stop. Anyone who is trading the equity futures, long or short, look, we had a spike up, we had a spike down. You have to have a wide stop. And the only way to have a wide stop is to have a very liberal stop to where you can sit out this whipsaw action. All right, so future down. Let's take a look at bond yields real quick. Let's see what the US 10-year is doing. And sure enough, everything is going the same way. So dollar higher, yields higher, equities lower. That was the playbook. So let's see what the job report actually came out at. I'm interested in to see that. Not that the number matters. 261. Yep, 261. However, the unemployment rate did jump back up to 3.7. So a little bit of a mixed bag here. The 3.7 the market's going to like, but the 261 the market is not going to like. Holy cow. Canadian dollar. Let's check in on Canadian dollar because the Canadian job report absolutely smashed it. Holy cow. Up 108,000 jobs. Expectations were for 11,000. That is a monster report. That's definitely going to put the Bank of Canada back into play. You could see the Canadian dollar is having a substantial move off this. So if you played CAD and you played CAD long, well done. Well done. We are in a dollar short trade. Short dollar trade. I keep getting that mixed up. I apologize. But we'll see. Again, look at these long shadows. These long shadows. This is why you've got to play accordingly. But take a look. It's actually starting to come down now. The dollar is actually starting to lose a little bit of ground. So if we go back to our Kiwi dollar, you can see the trade's trying to bottom out here. Now look, I can take another 3 positions, and I will absolutely do that once we start to get some better looking price action. So we've got this long lower shadow that held. We've got this. I'm on a 5-minute chart, so fairly short-term time chart. So I'm just looking for another opportunity to buy. I'm going to take a look at this point right here, 58.47. That's going to be a decent shot. So 58.47. I'm going to put in another buy here. 58.47. Again, I'm going to be using a buy stop. Using a buy stop. This is where I can have little orders sitting out there waiting to be triggered. And then if it gets filled, I will have to then move up my overall stop. So looking to take a second position here. And you can see second position has been taken. Average price is 58.37. 58.37. So now I've got to adjust my stop. And this is where, again, you got to get your math skills out. I'm going to just do some rough calculations here. We had a 75 pip stop on a fourth of position. We now have a half a position. So we need to move that stop up. It's going to be somewhere around 57.70. 57.70. $57.70 is going to be my stop. And if I take another position after that, then we're going to have to move this up. Eventually, I will get on my full position. And at that point, I'm going to be moving to a trailing stop. Now, again, this is a Friday. I do not want to hold this over the weekend. So I want to be fairly nimble with my exit. Once I build my full position, I'm going to be moving to a very tight trailing stop, and I'm going to go on a 1 hour candle, and I'm going to be using the 13 EMA. The 13 EMA is going to be our blue line here. Once we get a full position, this is going to be the line in the sand, and I'm just going to trail my stop behind that. And as long as the trade moves my way today, I'm going to stay in it. And then at the end of the day today, before I shut everything down, I will exit the position take my gain or loss, and that's going to be it for the week. So that is the trade here. Does anyone have any questions